Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Day, the daily quick stock market analysis show where we understand what happened in the markets from the technical charts and then try to learn something from it and plan for a better trading plan for the next day. That's what we do. So if you're not subscribed, subscribe and share to friends and colleagues. We had a consolidation day today, right? It was a flat close. We have an RBI policy event that's coming tomorrow, and we had an expiry on the Nifty weekly today. So it was consolidation, flat close in a nutshell. This is the wrap up that we have here written words, and then before we come to that, let's get into the charts. Let's remove all the things and then see what is it. First, Nifty. Here we have a hammer that's followed that's followed from an earlier candle which is also like a hammer but more like a doji, indecisive, but both candles are indecisive because of the small body size and large wick size. The wick on the support shows the support from the downside, the buy on dips that is there, and today it in fact breached and confirmed the hanging man pattern that could be formed after a green, a red, indecisive, and then a down day. It went below the previous candle, the yesterday's candle's low, and confirmed that, but did not go further up. So still, it's a hanging man. Since that low is breached, it's a confirmed hanging man, and there is every possibility that it can further go down to the next support zone. Those are the next support zones. We have a gap support at 2700 nearby, so that's the next support. So basically, hourly, if you see, it was consolidation that's happening since last 2 days. Doing nothing but very range bound, very small range, range bound consolidation move is what is happening, right? And yeah, so you can narrow down to 2 days of consolidation is what is happening, right? And that's about Nifty. Now, Banknifty, we have a hammer, almost like a hammer. This is some wicks that's on the upside, but it's a hammer, and that has wick size indicates that it went very close to that support, and that gap support is still valid, and it bounced from there, right? Intraday it was a gap down and a reversal from the dip and then the consolidation. Same with Nifty also, but with a lesser effect. Gap down and then reversal and then consolidation, but it was more pronounced in the Nifty with a bigger gap down and bigger dip, and then which got bought into. And then finally, when it reached the top, it was like range bound. So after noon was range bound more. Morning half was dip and buy. So there are buyers out there who are ready to buy whenever there is a small dip that's happening. That's what it's all about. Now let's see. Suppose this hanging pattern is going to work out and more retracement may come in. Where could it stop? First is the gap support 2700. So 2700 could be a great gap support. Then we'll have the Fibonacci retracement levels of 23 coming at 2459, 460. So 2500, 2450 would be a good support zone. Then after that you have 2300, which has got another gap support. That's levels you have to look for the next day. If at all there is a retracement in the next few days, if at all there is a retracement that's coming on the upside. On the upside, it can be uncharted territory. But if you look at the Fibonacci extension that we have drawn from the previous swing low, right? That's what you see. This Fibonacci 68. It has actually hit the 61.8 Fibonacci extension level and then paused. So 61.8 is a very crucial, either on the upside or downside. If it breaches that, it's going to be big moves. Uncharted territories, you can say. So it is exactly stopped there. So we'll have to see, and it's also on the top of a trend line channel, parallel channel. You can see that it's in the very top of the channel. Right? And it's consolidating there, showing some restrictions. More retracements can be expected and all this. But if it breaks out and goes from here, it can go to 78 retracement, which is up to 21,500. So 21,500 can be the target if at all a breakout happens. But given that there is a parallel channel, there is a 60-minute Fibonacci extension, and big violent moves of 1,000 point nearly has happened, given the fact some retracement can come in, so that's what you should expect, and from the Fibonacci retracement you can understand it better, right? Similarly, the Banknifty also, it's in a parallel channel, but it has not reached the top. There is some more space till the 47,800 or 48,000. Those are the places where it can move up to. So that will be the resistance on the upside. If at all it moves further and makes a new all-time high, that's where the resistance would come in. 48,800, 47,800 and 48,000, that level. And there also it got stuck, unable to close above the 61.8 retracement from the Fibonacci. In order to find the upside, we had drawn from the previous swing Fibonacci retracement. So if at all it moves, it can go up to 48,200, which is 78.6. So that's the upside resistance that can come in play. Downside, probably it may mean that it has done a change in priority and taken a support near the gap, and now a bounce up can happen. That's possible. Or it could consolidate the zone for a long time, or it could break out. All these possibilities are there, but the first support could come in as a gap at 46,500. If that is taken out, then we can look at supports at rounding numbers at 46,000 can come in as support, 45,000 can come in as support, and then the gap is there at 45,000 nearby zones. So that's support on the downside. That's how Banknifty levels are, right? So Bollinger Bands, if you see, it's expanding on the upside, and clearly Bollinger Band expanding on upside means it's walking on the side. It has not fallen from the band. This is the band. Band expanding upside means more upside is what you can expect. That's what the bands are telling us. But also one thing is, the more it is far apart from the median of the bands, the more there is a chance that it can fall back to the worst median. 20 moving average is the median of the Bollinger Bands. Here also, Bollinger Bands are expansion, walking on the bands, extreme bullishness is what it indicates. Now let's come back to the slides. So we had a flat negative close on Nifty and flat positive close, 0.01, very flat, right? That's what has happened in Nifty and the Banknifty. Remember, we managed to close Nifty above 2,900, despite the fact that hangman pattern got confirmed. And it's a hammer on both. Hammer and stick on the top of a rally always means that there is potential for a reversal if it is confirmed as a breach of the law of that hammer candle, right? So that is nutshell. Now, intraday we had seen what is it already. Fyers have turned to be sellers. 1,500 crores of selling happened today in the cash market. So 3 consecutive weeks we had net to net, week to week basis buying that happened with Fyers after 17-18 weeks earlier selling for a long period of time. Now Fyers had turned into buyers about one day 8,000 crores and another day 5,000 crores and all that, but suddenly they have booked profit and then sold off. That's a concern. Hope the Fyers would come back. Fyers need to come back for the value to continue. They may. They has also sold a little bit, not buy. That's why the market, Fyers did not sell too big, neither did DAS sell too big. DAS almost did not sell. That's why we held that positions. Otherwise, we would have fallen and made the correction big. The levels we already seen. Upside Nifty 21K, 21,500. Supports for Nifty 2,500, 2,700, 2,300. Like that. Banknifty upside 47,000, 47,250, 47,750, 48,000 resistances. Downside supports 46,500, 45K. Momentum is little bullish, rising up. Alright, slightly falling, but bullish. The bullish momentum is in falling mode in the case of Nifty and Banknifty. So Banknifty had better momentum today as compared to Nifty. Trend indicator ADX also is pushed in the bull zones, rising up. So trend and momentum absolute bullish, no doubt about that. Right, India Weeks finally has cooled off. It was spiking up to 20% or something when market moved 5%. The market has cooled off hardly few points, not even 1%. So, but eventually after the event, 2 days it continued to be moving up, but the VIX has finally cooled off 12%. But still, you can consider this that the long haul regime does not change in moved above the 15 yet. So, Bollinger Band is still indicating extreme bullishness now. Technically, markets are showing extreme bullishness as per the charts, but kind to be cautious. Caution has to be there because we are at an all-time high. Vertical moves, walking on the bands, and there needs to be some cool off. And the patterns, price patterns are showing some red small body indices, hammer kind of things on the top. So there is a confirmation of hanging man and all that. So you have to be careful. Some corrections can come out, whether it's for to 1%, 2%, 3%, 4%, you never know. Just have to look at probabilities and study the Fibonacci retracements accordingly and the gaps, supports, and resistances that we have. So we look at it. Now, industrial sectors, if you see, almost half of them have green actually. Half of them were red, but flat red and flat green. Across the sector, all the sectors are in bull zones. You know, some dip has happened. It's in the bull zones. All the sectors, major industrial sectors that we are talking about, IT, metal, FMCG, reality, and all that. Right. The heavyweight stocks that contribute maximum to index, they do not do. They are all flattish today. Right. It's HDFC Bank and Kodak Bank close green. TCS is also close green. Right. But the momentum wise, if you see, all the heavyweights are in the bull zone, the short term. Right. So across the sectors and across the heavyweights, we have bullish momentum there at least. Although there is a flat move that happened today. The US India is also in the top, very close to the all-time high. It has moved up substantially, and that's why now market also has been moving. But now it is a red. It is showing a red, and it's showing some resistance at the top of a descending wedge. So we have to be cautious. Dollar has cooled off, but rupee remains to be weak, and crude oil is spiking slightly. It is below 75. Which is economy-wise very good for the country, not for our market economies. But yeah, crude is fallen, gold is green on the top. Some red has come in, but some green has come back now. Remember, it had made a new all-time high after a long time, so it's on the top still, right? But yeah, so there is some resistance that's there in global indices, and otherwise commodities are fine. No major cues coming in, except the fact that rupee remains weak at the same zones where it had been consolidating since ages, right? The USD INR we are talking about, right? Now, this is not the time for value investing. You cannot get any stock value. Everything may look overvalued and just short up. We miss the rally. Now we can do only momentum investing. It means as long as momentum you enter in at the breakout zones, which tight stop losses, and momentum investing can be done, but value this is not the time. If it's SIP, you can continue doing that. SIP investing. Right? Now for the traders, this is time for slight cautiousness. The direction is very clear; it's absolute bullish. But time to consolidate. Time for retracement because it is moved substantially. It may be small retracement or it may be go up to 5%, 4%, 3%. We never know. But consolidation and retracement is what is going to happen ahead. Before it continues the rally, right? Otherwise, it does not make sense because we had done a vertical rally. So you have to be cautious, instead of being blindly bullish. Right? Now tomorrow we have an RBI event at 10 a.m. So market will be volatile accordingly. Next Thursday, Friday, we'll have the outcome of the US Fed interest rate hike. RBI policy event for trade details also will come tomorrow. We'll be talking about US Fed interest rate. That's there next week. So these days, that's happened to be an expiry also, weekly expiry. So, but the outcome may be on Friday. So we may not back the expiry. But yeah, all this will cause volatility during the day and previous days. Right? So we have to be slightly cautious about that. Yeah, just to wrap up, the charts are extremely bullish. Market has done a vertical move, no doubt of direction. But time to be cautious slightly and not to be blindly bullish because retracements are due. Can come in any time to any extent. Right? So you have to be slightly cautious. Go into directional strategies instead of non-directional when the market is trending up on either side. That's a simple rule. And manage your risk profile if the VIX is shooting up. As of now, things look, VIX is a low vol regime, nothing to worry. But yeah, adjust and cut short and manage your position size according to how the market moves is a trick, right? And technical charts helps you to understand the probabilities. Market may surprise you and take you ulta. That can happen anytime. But all that you can do is look at the charts and understand where are the probable places where it can slow down or it can face breakouts, and all this can be understood from different tools and techniques in the technical indicators and all that. Right? That's all we can do. That's all that in our hands. I'll just probability study. That's all. Potential move, potential down move, up move. Only potential, not confirmed. So, if the view goes wrong, only thing that is in your hand is to manage the risk and then come out as early as possible. Right? with minimal damage. That's all that means. Managing your risk is all key, and having capital protected, especially if in derivatives and options, right? That's all I have. The view is yeah, clear, and yeah, that's all I have. Yeah, if you're not subscribed and watching this, please subscribe. If you're not subscribed, please subscribe and share with friends and colleagues so that reaches out to max. And we have also regular tweets and technical chart studies and all that posted in tweets and other social channels, links of which is there in the description. Please subscribe to them so that you don't get not to miss out on them. That's every day we will be posting charts and techniques, right? Multiple charts and multiple studies, right? So check out that as well. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.